Hey everybody, got something different for you this afternoon. We just wrapped a 2-hour Zoom call with a lot of you from the Patreon community, a few folks from YouTube, where we went over the new AI trade desk, some of our market analysis tools, and a couple of the new TradingView indicators. You can find all of those on tradingapologist.com. The AI trade desk is really going to be the star of the show, and since it is a long call, I have chapter markers so you can just skip ahead to the particular tool that you are interested in. So if you want an assistant for fundamental analysis, that would be the TA terminal that you would want to check out there. If you want to brush up or sharpen your option skills or learn about more advanced option strategies, that would be the position designer. And then if you want that companion to help you make sense of charts and the technicals and all the signals coming from markets, that would be the AI trade desk. It's really designed to help you filter through the noise and give you very detailed and actionable reads on charts. And there's a lot more than it can do than just that. So that's really the thing I'm most excited about. And then we went over a couple of the TradingView indicators too. We just launched adaptive levels and a money flow tool, which now adds to our suite of 12 TradingView indicators. But for everything else on the website, you don't even need TradingView. You can access all those tools directly on the web, and our indicators are integrated into a version of a chart where we rebuilt TradingView, we rebuilt all the indicators on Python for the AI trade desk to really sharpen up those reads. So I hope you guys enjoy. Leave your questions, comments down below, or if you are part of Patreon, we have the support sections and the suggestion sections on Discord where you can ask questions about any of these tools and you can make suggestions for features that you would like to see integrated, because we've spent a decent amount of time refining these, but we want to keep sharpening the tools. We want to make the user experience better, and today is really the weakest that these tools are ever going to be. As we continue to refine them, as models begin to get more powerful, these tools will also increase in their strength and their capability, although they're already really darn capable right now. And one question that came up in the call is, why can't I just ask an LLM as opposed to the AI trade desk about a position? And you can ask an LLM, but it's not going to have context and it's not going to be trained. So this is trained on technical analysis on all of our indicators that are fed into the charts, as well as hours of my own trading. So I've recorded hours of my own philosophy on reading charts, and that's all been integrated. So it's really almost like chatting with an AI version of me, or a baby AI version of me, to give you that feedback on charts and to be that sounding board to say, when should I get into a position? How is the chart looking? How should I consider my position sizing? All of those things. And I think you'll find it to be really helpful. So enjoy. Looking forward to checking out your comments below, and have a great weekend. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, great. Well, welcome everybody. Thanks for joining on a Friday afternoon. I hope you guys had a good week. If you have been in the community for a while, which a lot of you here have, you've seen the evolution of these tools that we're going to go over today, and they really started as rough ideas in the spring. And if you were a beta tester early on in any of the indicators, you can attest to how far they've come. And we're now at a point where they are really ready for prime time, and I'm looking forward to going over all of them with you today. That said, they're 98% of the way there. We're still in a bit of a soft launch period with all of this, and are refining some of the user interface, a few of the features, to make them as user-friendly as possible. So thank you to all of you who have been providing valuable feedback and suggestions this past week, and we will keep that going. And if you do need support with any of these tools that we're going to go over today, or the existing indicators, Discord is the place to do that. So we have dedicated channels. There's a TA indicator support channel, a TA website and market tool support channel, which would be obviously anything on the website or the market tools that we'll go over today. And then there's a feature request channel, which is essentially a dead channel, meaning we're not responding in there actively, but we are keeping track of all your requests for features, and we will be rolling those out over time. So I would say before we get into it, I have to give an intro to Malaise, because many of you know him, but maybe you haven't really gotten to chat with him or don't know his background. But we are very fortunate to have him in the community. And I first connected with Malaise a few months ago when I was first working on the Stack Attack RSI indicator. And I was able to get it to a certain point where I just wanted a more advanced version of RSI that would give us multi-time frame analysis, saying when multiple time frames are overbought and oversold, a quick visualization for that. but I couldn't figure out the consolidation periods. If things didn't get oversold, but we were consolidating a flag, how to get it to fire again. And Malaise kindly volunteered to help with that and was able to architect a very elegant solution. And then as we got to know each other more, it turns out he's the lead AI solutions architect for a large global firm. I won't say who it is. We'll keep it general, but they are the leading company in their sector. So we're very lucky to have him in the community, and I'm very lucky to have partnered with him on these tools. And then we just started chatting, and with other things that I already had 90% of the way there, like mean reversion, I was just trying to figure out how to filter out things to get less signal. And then he brought the idea of the adaptive levels to adjust mean reversion over time as volatility changes within a particular asset. So he's brought a lot of value to these tools. Many of them are his creation wholesale. And, I'm just very thankful that he's really helped refine and elevate these to a new level. Before, it would have been like visiting the Venetian instead of going to see Venice, a shell of what they truly could be, thanks to his help. So, I do, before we get into the details, I'll just go over a high level of how all these tools fit together. Because just like with our indicators, we don't want one indicator to do everything. There might be a little bit of overlap indicator to indicator, but they are very specific. So I guess just going back to what we were talking about, something like mean reversion and RSI or stack attack RSI, and even the Gann swing indicator, they all have entry and exit signals, but they are looking at very different things in the market. So mean reversion is how far are we stretched from the mean, being overbought or oversold for an entry or exit. Stack attack RSI, when you get those signals, it's saying, okay, we're confluent on all these different time frames, just in terms of the momentum being oversold or overbought. And then something else like the Gann swing indicator with the 3-bar signals, which are also entry and exit signals, that's looking at more of traditional technical analysis. So they all serve their own purpose, and for your particular style of trading, you can figure out what works for you. And I would say the same thing is true for the tools we're going to go over today. I don't want any of you to feel overwhelmed. Just because the tools are available on the website and in the community doesn't mean you have to use them. You can absolutely be a successful trader without using any of these tools, but for certain traders, they will be very helpful for certain traders and certain strategies. So just at a very high level, TA Terminal, and you know what, let me just share the website as we're talking about this to sharpen things up, because you all don't need to see my face while we're talking about this. All right, so if we're looking here at the website, everything lives under market tools, or the AI trade desk is right here. So TA Terminal, for example, this would be your fundamental analysis sidekick. So if you're assessing the health of an asset or the financial health, to see the analyst ratings, the latest earnings, near-term levels, call and put walls, buy and sell imbalances. So all of that is available here. We'll demo it in more detail in a moment, but just in terms of how to think about it, fundamental analysis is happening here on TA Terminal. The position designer is all about options. If you want to learn more about options, how they function, how to build positions, multiple legs, this is meant as an educational tool for newer options traders. And for more advanced options traders, you can really build out, model, and compare multiple positions, and you can bring in your existing positions as well to see how they function over time. Let me just, get out of the demo mode here. So we can load our chain, but we'll get into the details of this in a moment. And then the AI trade desk, this is really to help you sharpen up your technical reads on assets. So it's trained on our indicators, hours of my own analysis where Malaise has fed in the recordings into the model, as well as technical charting rules, along with being trained to understand markets, fundamentals, and everything else with how we assess markets daily. So the point isn't necessarily to replace your analysis, but to help you focus it and to keep you from drowning in too much information, because there is a lot of information out there. So the point is to give you a technical deep dive and reads to determine if you should act on a thesis, if now is the right time to act on that thesis, and how you should consider sizing positions. So the last thing we will cover today, after all these tools, actually we're going to do it before all these tools, we'll go over all the tools. Then we also have two new indicators. We have adaptive levels and we have a money flow indicator. So let's start with those, since those are going to be really quick. Then I'll talk about these tools in a bit more detail, and then I'll pass it to Milius at the end to go over the AI trade desk. So Milius, do you mind if I pass it to you and you can go over the two new indicators?
Sounds good. Should I take over the screen? Maybe.
Yep. I just stopped sharing and I will pin you.
Let me see if I'm allowed. Select the window. All right.
Oh, okay.
So let me know when the screen loads, just so I don't start. All right. Sounds good.
I've got it.
Okay. Perfect. So I'm going to start first with the levels, because I think this is the one that some of you have already started using, some of you have already seen. And I think the concept with levels is relatively straightforward from a conceptual basis, right? We usually talk a lot about support, resistance, areas where we expect the price to bounce, areas that we are seeing if the price goes over, just general support and resistance levels. So this was the main motivation when creating the indicator. And what it's trying to do for you is identify these levels without you having to go and chart, let's say, right? Obviously, you can always identify them yourself. No one is stopping you from doing your own drawings and mapping like, hey, this might be a flag, like I think we all unfortunately got to see, right? But you will see that levels will give you different areas where price is either expected to act as support or resistance. Now, you will also see that we have some areas drawn quite, let's say, sharply, while others are fading into the background. So by default, the indicator will use different, let's say, different strength and quality mechanisms to filter them, right? So when you look at the more strengthened places, right, what you will be able to see is those are areas where price is very strongly expected to react, right? So then the more faded ones are kind of the opposite. You are expected to have the price act on some level, but you're not expecting this to act as a strong support or resistance point. So obviously, you can tweak them, you can work around them. There are different settings. And for this one, we will include a guide as well. But just to go over what it's trying to do, it's obviously, as you will see with many of our indicators, it's going over multiple timeframes. By default, it will look at the weekly, daily, 4-hour and 1-hour timeframes. You can obviously take out some of them if you don't care about those. I will say, I think it works best when you do have them all enabled. It's going to take into account Fibonacci retracements, psychological round numbers, a lot of different areas. And because it can get quite noisy just by default in them, if you have a long historical chart, you can always filter by quality, you can filter by strength, you can filter by both of them, right? So you can choose how many you display. If you are filtering, let's say, by the top percentile, so you are only seeing the best half, right? You can play around with those, and ideally this can help you identify areas where it's very easy for you to, without having to do a lot of analysis over a lot of charts, without having to spend time, let's say, directly charting in all the assets that you might be interested in, you can simply find them and say like, all right, so this is an area where I am expecting price to react. This would be a secondary area. This would be a strong area. Now, 2 more details, as you will see. The first one is these faded areas, right? These areas where we see kind of an area around the support and resistance level itself. Now, this is quite key because we don't usually speak about support and resistance from an absolute level. It's usually an area. And that area is drawn faded away, as you can see here, and it will be drawn different with different girth based on the price action. So the more volatile it is, the where it reacts will significantly affect how strong this area is and how much, let's say, margin you have on both sides. The final area on the levels is, as you have seen, this line, this gray line over there. And this is kind of an add-on, to be fair. It's the next all-time high predictor, right? Now, it's very hard to draw support and resistance once you are breaking all-time highs. At that point, it's anyone's game. So what I'm trying to do here is based on the past price action, once again, round numbers, Fibonacci is included in there, but those are small percentages. I'm just looking at past price action, how it broke to the all-time highs in the past, and trying to throw a prediction. And you will see that it's obviously offset because it's predicting before time, but you can see at this point, it was already trying to predict this area. So you can see consolidate here before the actual Bitcoin price, which is this chart, consolidated in this area. Now, as price goes down, obviously, all-time high stays all-time high. You can never get all-time high below. That's your levels, right? So you can see this is the next area where the system thought an all-time high was going to be. And, well, it nailed the top area. Then we consolidated below. As all indicators, they are not going to be perfect. For example, here, it understood the move, right? If you take the peak, it coincides with the lower level, but we actually overshot. While in the next all-time high prediction, it did get it quite nicely, right? These are the all-time highs that we got. So this is the adaptive levels indicator. I've been using it for some time. I've been liking it quite a lot. It's been, I think, quite useful. But as with all indicators, and as Tom mentioned, these are not must-haves. It's not like if you don't get it, like it's over. If this is something that you think it's going to be useful for you, specifically if you think that you don't really have time to go over all the charts and draw support and resistance areas, if you have trouble finding those, this is where this indicator becomes useful. As with all of them, they are not must-have, and they might as well make mistakes, right? So always treat them with a pinch of salt.
Great.
Now, Tom, anything you want to add on this one?
Just two questions I was going to add to add some
I'll
clarity.
Switch to a different one just so we see them in different charts. But yeah, please go ahead.
If folks use these on different time frames, are they going to see different levels, or are they consistent across time frames?
So that's actually fantastic because I did make them different per per time frame, and that's because you do usually want to play different ranges and different time frames. You are trying to play different games, right? So the higher your time frame, the more sparsed out your levels will be because you usually have more time for price to move. You're usually being more patient on higher time frames, right? So for example, in Google, we see, all right, so this consolidation area, this was the next, this was kind of a place where it overshot the price itself. And we see that we have this line, right? So along 341 and then 326, and then in all-time high, we have resistance at 440. If I go to the 4 hour, it's going to paint a different picture that is prioritizing 4 hour, right? At this point, 4 hour becomes the priority level, and it's going to give a higher weight to those bounces on the 4 hour. Obviously, weekly, daily, and 1 hour are still a factor, but 4 hour will be the predominant factor on the calculations of the levels that are displayed. So we can see here this acted as support and then flipped as resistance, right? And here, actually, I like this one, coincidentally. We can see that this is the levels, right? It's not one specific price exactly. It's an area, right? So it's going to give you the levels for the 4 hours. So we can see places where price bounces more, like this one, where price kind of bounced both these directions, right? Higher quality, you will see it better maybe when so you cannot zoom in TradingView, but this one has a quality of 115, and this one has quality of 76. So you can see 76 becomes dimmer, and this one is even lower, 46, right, becomes even dimmer. So it allows you to kind of have immediate visual priority on this one. So yes, they will adapt based on your time frame.
Yeah, okay. Yeah, the strength and weakness I like just with the transparency there. And then if anybody didn't catch it, those shaded areas around the line, that's the support and resistance zone, because support and resistance is rarely an exact price point. It's more of a range. And Miles, if we broke below that lower swing low and the dark green line, would that then generate the next levels down, or when do those start to populate?
Yes. So I do end up with noisy charts, but I don't like noisy charts. So in my case, I'm only showing the 2 lines on top and 2 lines below. But you can just extend this, for example, right? And now it will calculate 3 more lines below and 3 more times. If there are no more lines, then no more lines, right? But this is, let's say, up to your settings. So let's say that we drop below this one, we would stop rendering the top one, and then this would flip to resistance, and we would render one more line below. So I run 2 and 2 because I think that usually gives me enough information, right? But you can have as many as you want, or as many as they exist. Maybe it's better wording. But yes, of course, you can choose how many you display at the same time.
Okay. I actually have not played with that setting, but that's actually nice to be able to.
I like it a lot. It keeps the chart focused.
Yeah, absolutely. Okay, great. Well, before we move on, I figured normally we'll save questions to the end, but I think at the end, let's just keep it focused on the AI trade desk. So before Elias moves to the next tool, does anybody have any questions on adaptive levels?
I saw Darwinning mention, maybe I answered this later.
Yeah.
The gray line is part of the adaptive levels. It's the all-time high predictor, right?
I have one question
about levels. Yeah, go ahead.
If you could talk just real quickly how this, I know that the fib levels are built into the algorithm, but if you had them on and you had your indicator on, I mean, just maybe how do those correlate, or should we only have one of them on?
Well, it's, I guess, to some degree, personal preference, right? I would never tell you like, oh, only have my indicator on, right? You can obviously combine this, but you can see, for example, here, the one, if we have one here, right? Then maybe the other way around. So 1618 would be quite high up. Fib is taken into account. It's one factor. One thing that I actually like, I'll switch to the SPX. I like this right here. So again, Fib is taken into account, but price action, volatility, volume, and past behavior is way more important on those predictions, right? So up until here, right, we were making new highs on the on the SPX, right? And then we have this huge drop. This was, I think, tariffs at this point, right? And we dropped 21%. And you can see that this downside volatility spike directly correlates and the correction on it, right? So you see at this point, right, we are on this low. As soon as we have this violent move up, the price action, it's indicating this is going to move violently, so it has a spike. Obviously, as we start consolidating, it stops pricing in that volatility, and then it starts consolidating back. But you will see this is kind of coinciding with our price now. To some degree, this is an index, and at some point you will always get a coincidence, right? Like these spikes, they are telling you, hey, volatile moment, I'm pricing this in. What I like to use more than these spikes to know if I should trust it is consolidation, right? Mm-hmm. Once we get consolidation on a level, this would be, for me, a significantly more trusted area or prediction than this one right here. And that's what we were seeing on Google, or I'll just switch so we see different charts, right? But that's what we were seeing in Google, NVIDIA, and the others. We saw consolidation before. So this is what we get here right now. So we see consolidation, and then this is a consolidation level, this would be the new all-time high. Then it moves and it consolidates here, which is nice again. And then we see here it's predicting these areas, right? It touched. This is the next area. We can try different assets. I think HIMS has dropped massively, so I have no clue how this one is. I've never looked at it. Right. So let's see. Right. So we see once again consolidation. These areas of consolidation, we can see this is the all-time high matches. Zoom in a little bit. But whenever you have consolidation, those are the areas, let's say, to trust as levels, not necessarily the peaks. Right. So here, obviously, huge peak, so it prices the thing. But I would say that this would be the new area to watch for an hypothetical all-time high in HIMS. So trust the consolidation, not the peaks.
Yeah, that's a good way to frame it. Oh, sorry, go ahead.
Well, I was going to ask, so do we use normal TA at this point so I'm just wondering the timeline for that all-time high. Is there anything built into this to know that, it's showing you where it's leveling out and it's consolidating at an all-time high? Do we have any time frame built around that?
No, I've kept it, and you will see this with also the other ones. They are trying to each one have a specific area of responsibility. So this one's area is price levels, right? Now, maybe in the future we have something around cycles or potential moves, but I'm not including timing in this one. This one is fully on price levels, not adding more complication to it, at least for now, right? I'm trying to keep them, let's say, focused on their own role.
Yeah, and
Okay, thank you.
Dave, one way I thought about it, Miles, do you mind going back to the SPX chart?
Mm-hmm.
I think the SPX chart is a good example because obviously HIM's pulled back a lot, but it had that initial spike and then the confluence with all that consolidation just under the 2024 low. So you had that confluence there to identify the level that we've gotten to now, just to the right, actually. I'm sorry, I said 2024. I meant 2026.
Okay.
I'm dyslexic.
No worries.
So yeah, that initial spike at the 2025 and then that other consolidation. So on, if you don't mind going to the right a little bit, Miles.
Yep.
There we are. Yep. So as we were coming out of this local bottom, because of all that consolidation and things were just ripping, you can use that as a pretty decent zone to anticipate some level of resistance, which now, it looks like we're getting above. So the timing component is hard, but when you do start getting some patterns or some flag breakouts that are confluent with some of these previous projections, you can bring those two together as an area where like, okay, there probably is going to be some profit taking and resistance in this level.
I will also address on the timing just because it's always related, but and you will hear Tom mention this a lot, right? There are conservative targets, there are, let's say, more bullish targets, and then maybe the mean. If you see, it's an area, right? With the SPX is harder maybe because obviously, again, it's to some degree designed to constantly go up. But you will see that it produces areas. And I think I usually do like to look at the lower area because this is the conservative estimate, right? This is being conservative. And this one I like because this is the median, right? This is, let's say, the most likely, always within margin of error. But I like to look at these two as kind of my areas of this is the conservative target, this is the most likely target. So you can always, let's say, play both. Bullish scenarios, I keep them just in case, right? But they are usually bullish, right? You should not be trusting, like you should not be making maybe your calculation based on the bullish case. But it's there because it makes sense to keep it. And then you have like a proper area, but then you have all three aspects of it.
And Stoic Dolphin made a good point. He said bringing together mean reversion is a good way to think about it. And that's why we have multiple indicators. If we're getting to a price level that aligns with a previous all-time high projection and mean reversion is stretched to the upper end or RSI is overbought, then it's giving you those multiple layers of confirmation to say, okay, we probably are going to either consolidate or pull back at this particular level. And then one thing I just wanted to address, there were a couple questions on how to access these. So I put a link in the chat. The adaptive levels and the money flow, they're the only tools that aren't included with the quant membership, but you do get a 30% discount on everything, including the AI trade desk. And that'll just apply automatically when you're logged into the site.
Just quickly, someone asked about if it works in lower levels. It does. It's based on price action. So you can see this is like an area where it bounced a lot. So you have one. This is another area where you have a lot of them. I would say, as with most of the indicators, I would always trust them less on the lower time frames, especially if you don't, like, for example, mean reversion needs specific configuration for lower time frames. It's actually in the guide that's on the website already. But I always trust indicators less on lower time frames, but you do see the levels play out. So yes, just maybe my own bias, but be careful with them.
Yeah, makes sense. I'll actually have to try to integrate that with perp trading to see how it works out. James had one question on understanding how Fibonacci's are calculated into this.
Without, let's say, showing my cards too much, Philip, the way different areas are calculated, it's based on, for example, Fibonacci specifically is based on swings, on big moves, right? On the big moves. And because it's integrated on big moves, so maybe go out of the 15-minute back to the 1 day, it's actually going to draw more than one feed, right? Because for us, it might be easy, let's say, to say, all right, so this is one, but this can be another, and this can be a different one, right? So you can obviously think of drawing multiple. So Fib is looking at multiple feed areas, and then it's more of a plus, right? It's extra marks. It's not a big weighted component. It's, again, if you are already at a 9, it might move you to 9.5, but it's not going to make you pass. So if you are in a 4.5, it's not going to get you to a 5 in a passing grade, right? It's extra marks just to get the best score ever, but never to pass, right? Most of it is based on price reaction around levels, how it interacts with those levels, and how it behaves with them.
Great. Okay, well, let's move on to the next tool because we've already burned half an hour and I want to be respectful of everybody's time.
This one is way quicker. This one should be actually way quicker. And this one, I would definitely not trust in lower timeframes. The only area I'm using it is on weekly. Because first of all, I usually have it taken down, right? But quite important, TradingView does not give any information regarding orders, right? So this is inference-based data. You can see how the price moves in those indeed lower timeframes and aggregate it and map price behaviors to get the bigger picture. Because there are specific price behaviors that are more related or correlated with institutions, while others are more correlated with retail. However, again, this is an estimation. I do not have access to the order book. We can have access to order books somewhere else or better estimations, maybe in the AI trading desk, but not in TradingView. So what I'm doing here is an approximation, right? Just to be clear. And then once the disclaimer is done, this one is trying to tell you with the blue price where institutions are accumulating. Deeper blue means more concentration of that behavior. Orange and yellow is retail, right? So you can see how different orders are behaving, and then you can extract patterns. You will also see that we have dots, right? So kind of purple dots for retail and blue dots for institutions. These are mean reversion dots. So these are areas where we think it's going to mean revert in terms of the actual flow, right? So this is an area where the system thinks institutions are going to switch to buying. And because it's a wave, it takes time to correct, right? So it's a lagging indicator because it's accumulating window. But this is an area where you can start to pay attention. Hey, maybe they stop their selling and they start accumulating. So you don't necessarily want to look at the size, let's say, of the waves, but at the slope of the waves, right? And you will start, if you look at the slopes, that's where you can start to get some behavior information, right? So if we look at the most recent price action, you will see, and the behavior is relatively consistent. They stop selling. That's when you start to get some move. Then on consolidation, that's where they usually start to buy, right? And then surprisingly, in this entire area, we have seen very little volume. And I think someone said in Discord that was actually correlated with the order book, that they were indeed having low volume. But again, look at the slope. So I am particularly scared right now because we have very little participations from them according to the indicator. But this is not entry or sell signals. This is more, let me take a look at the macro situation without having a specific tool outside of TradingView to look at it, right? It's contextual indicator. You look at it if you're trying to get context. You don't look at it to execute a trade, right? And again, the slope is the importance because it takes time for them to become net sellers or net buyers. So look at the slopes. Don't look at the size of the wave. Obviously, maybe size of the wave does correlate to some degree, right, with the price movement, but this is contextual information within TradingView, so you get extra information. And then you have the mean reversion dots. That was kind of a funny thing that I was trying, but I ended up liking them. They did become quite useful, so I kept them.
Great.
So this one is simpler.
Great. I tried to explain it, but there was a follow-up question on how, if you don't see the specific orders, how are you determining in the volume or different things, the characteristics to extract to say this is most likely an institutional order versus retail orders?
So again, I don't necessarily want to tell you how it's computed behind the scenes for I guess protection reasons, but I think the people, it won't take you too much to find this type of information. And that's why there is a very clear kind of notification that you will have to manually take out approximation warning, right? It will pop up heavily here.
When you load the tool, yeah. Because we just want to be clear with that. And we probably are going to, at some point, build a web-based companion to this that can actually pull the API data and be a little bit more accurate.
Exactly. So you guys will have to manually take it out. I obviously already have it out. It's based on different price behavior. You can see, I have it out, but you can actually see, for example, in event saving and event saving. So price moves different, or let's say, especially again on the lower time frames, the type of orders and candle movements and volume dispersion, right? When you go to the lowest time frames, that's have different behavior compared. You have, let's say, different signatures, and this is like if you look how ChatGPT types and how a human types. It's still words, right? So it's still orders, it's still buying or selling, but there are signature differences, enough differences for you to infer a little bit. This is a cat and mouse game. They always try to hide their orders, right, for obvious reasons, and then people always try to update algorithms to kind of differentiate those. So it's again the similar thing to a typing signature or I think I'll stay with the typing signature like the LLMs because I think that's current enough. So I'll stick to that one.
Okay, great. There's one more question. I'm not getting. Can you explain again how we use it?
I might have. I can find.
Jose, are you asking that? Sorry, for money flow, or I am not fully understanding the question there in the chat. But
money flow.
For money flow, yeah.
Quickly.
Okay, I'll get the tools ready. But yeah, I think the typing signature is a good way to think about it. You can tell if your web browser, right? When you have to click and hold to confirm you're a human, there's a certain signature to the way your hand moves the mouse that's indicative of a real person versus a machine that's clicking the button. And you can see that in the underlying data for the institutional orders and the retail orders. So they behave a certain way, so we can extrapolate. This is with a certain percent of error baked in, most likely this kind of order or that kind of order.
Is this mic better? I changed it. I'm not sure if it's better.
You saw that comment. I was gonna. We could test it. Yeah, let us know in the chat if that mic is a little better. There was just a little digital distortion.
Yeah.
The part I get is the pattern recognition. I meant how to use the indicator. I joined late. Oh, okay.
No worries. But I do think this is one of the least intuitive. This is, and I think this might be easier for investing rather than trading per se. Like if you're trying to get like a 1 month move, that's, I think, a harder use case for this one. I think it's more for positioning or understanding macro in quotations within TradingView. So I like to look at the slope, right? So when and I do usually look mostly at the blue wave to be fair, but I like to see kind of this inversion. And that's basically blue wave up means accumulation. And you will see that the blue wave will usually coincide with areas of accumulation, right? So similar here. And then you will see once the blue wave goes down, again, and this is why it's not for trading, it does not mean that automatically we are moving up, right? You will need a slope change like this one, right? So you need heavy slope changes in order to indicate that a violent move is coming. But the way I like to use it, and maybe I switch to the SPX because it might give us a little bit more institutional, let's say, concepts in there. Oh, I completely messed my, yes, this one, the data does not get the after hours data. So now I need to completely restate. I messed up my own indicator. Fantastic. Let me reset.
While you fix that, I'll just say one thing because a question came up on Discord today. TradingView now has 24-hour charts. And for our indicators, really for any indicator, I would not recommend using the 24-hour chart. The volume is so low in that 24-hour period that it really throws off a lot of the signals when you're looking at volume, ATR, different things like that. So the sweet spot I've found is just using extended trading hours on the 4-hour chart, but the 24-hour chart isn't the way to go. You'll mess up the signals. Maybe one day, when more people are trading around the clock, but right now there's just not enough happening.
Yeah. So again, I just look at the slope. That's usually what I look at. This one, again, I would say is more for positioning or getting some macro information rather than placing a trade based on it. So I think about it more as context, the same way that you would look at options flow or the same way that you would look at PPI data within context, right? So it's more about getting context of what the system thinks is happening behind the scenes, but not buy or sell signals in the same way.
Mm-hmm. Yeah,
that's it.
And yeah, and on Google right now, I mean, to me, it's interesting. The institution stepped in on that little earnings dip, but it seems like the institutional confidence in Google is rising as retail confidence is falling.
You will see them. One thing that you will see is usually when they both coincide, it does usually obviously coincide with move rising up if both of them are in agreement, but they do diverge quite a lot. And that is also for obvious behaviors. You might just want DCA on a company while they are trying to just manage risk, or they cannot have more than 5% on a specific asset, different, let's say, rules at the game that they are playing. But yeah, that's also a different way of looking at it. Who is betting on the asset?
Yeah. And personally, I just look at this occasionally on the indices. And if we have a rounding top to say, is this a period of distribution where the institutions are selling? Or if we're severely oversold, is this a period of accumulation where they're starting to step in again? So again, not very specific in terms of the exact entry, but it gives you a general picture of periods of accumulation and distribution by the large players.
Are there any alerts that would be worthwhile setting on money flow that would be helpful, or is it just going to be more of a visual?
No, you do have plenty of alerts on money flow. You do have them like volume, low volume, churn, buying climax. You do get a lot of alerts. I've tried to increase those quite heavily. I think you can go with climaxes, right? Like this area, and not the blue, but the green, right? So this green bars is climax of buying or distribution. You can set alerts for the, let's say, background colors. So this green means little volume, moving price a lot. And red means the opposite, a lot of volume, moving price a little, right? So you do have alerts for all of this, including the mean reversion dots. So you can try to pay attention, for example, of, hey, when is a lot of volume coming in, moving the price not too much? Because this usually means stress in the markets, and vice versa, right? You can see in these areas why this is basically low volume, moving price a lot. So maybe be careful, right? Be careful about your entries in those sections. So yes, there are alerts I think worth setting. I would say either the stress or the rounded tops or the climax alerts.
Mm-hmm. Yeah, interesting that, I mean, there was an instance, again, I think that for the indices, this is more helpful, but that period you were just pointing out in Google, there was accumulation before that final dip. So there was definitely, yeah, right there.
Yes.
In that sideways part just to the right before that final dip down, there was clearly, right there, yeah, to the right, accumulation happening. then a sweep of the lows, so sweeping out leveraged positions or anyone with stop set, and then running the price up. So you might wonder why is money flow positive right there, and then price dips back down. That's just a part of the mechanics of getting people out of position before really reversing the move.
You can see it again. This is an area where low volume is moving price a lot. So you can imagine that there is leverage kind of going out, or there is, let's say, cascading effects on either direction, not only down. But this is, let's say, cascading usually, because again, low volume, a lot of movement usually does have that implication.
Yeah. All right. Well, let's keep going because we want to get to the AI trade desk. I'm going to keep my section really short because I'm planning on recording videos on these tools already, and we've talked about them before. So I'll keep this really brief, but let me know if you have questions as we get into the chat. So I'm just going to go to the AI trade desk. The TA terminal and position designer, you can access them here and you can make them full screen. But if you have the AI trade desk, we've integrated all the tools here and you can just access them from the right sidebar. So you bring in any ticker. You can build watch lists here. So you could build some for DRAM or for cybersecurity or whatever sectors you're watching to compare those reads. But I'm just going to bring up one read right now, and ALB, I just took a little bit of a position in that after hours. So maybe you don't know much about this company at all and you want to check it out. Well, as you get in here, you get the overview of what they do in they are a chemicals company that produces chemicals that work in semiconductors and silicon chips and that sort of thing. So they're a part of the supply chain. And you can get the fundamental snapshot of their market cap, their PE, their forward PE. And if you don't know what any of these are, you can hover over the info states to get an explanation. Now, I'm not going to read over all of these right now. Then you'll get an AI snapshot of the company. And then we get the analyst ratings right here. So right now, they're strongly leaning towards the buy side. And then we also get the fair value projection. Now, the fair value projection won't work for all assets. Some where the CapEx spend is really high right now, and you can't calculate this. It's just going to give you the honest answer of, hey, we don't calculate it for this kind of asset because it won't give you an accurate read. But in terms of the fair value, when assessing all the things, you can see that we're under fair value. And then it will also give you a summary of their latest earnings, the fundamental outlook for the sector. And then you can actually download the latest 8K, 10Q, 10K if you want to read through those. And if you have any questions on any of these things, I'm just the AI assistant will go through and price earnings to growth for PEG. I just asked, what does PEG mean? But you can ask specific questions of how are these numbers looking? How do they compare to the sector? And you'll have that little bit of interaction there. And then the last part, well, we also have the price chart here that you can bring up. So this will bring up the same price chart as TA Terminal with our indicators if you want to take a look at that, or you can click over to the TradingView version. I'm not logged in. And then we just get the options call and put wall. Again, all the info here. And this is more of a near-term read. So where do we expect resistance? Where do we expect support just based on the options activity? And is there any buy-sell imbalance? And you can learn about this here as well. And then we get into some notable flows and dealer positioning setup. So to really get that holistic overview of how an asset is looking, this is your go-to right here. And then if you want to save this, you can just hit star. And I've got a couple in my list here. And if you want to compare these aren't really assets worth comparing because they're in completely different sectors. But if you had a bunch of semiconductor names, you could see all of their statistics lined up here. And actually, we need to fix this. At least the colors are off because we used to color these red or green if it was up or if it's been bullish or bearish. But we will add that to the list. All right, so that is it for TA Terminal. And let me just see if there are any questions in the chat.
Darwinning thought you were buying. Jose says it's awesome. It's awesome. And then Malcolm also likes to join. So
okay,
nice.
Great. Yeah, it's really helpful just for that quick picture. So you don't have to search in a bunch of places. It brings it all together. And as Quant members, you have access to TA Terminal and Position Designer. The AI Trade Desk, we just can't bundle in because the compute costs are so darn high. Now, for Position Designer, this is a little bit more involved, but any asset you want to look at the options chain for, and I'm just going to click on Apple since it's here, you can start building positions. So it'll show you how the option behaves over time. Here you select your particular contract. So if we want to go out to February 19th, no, let's go to January 15th. That's the major day. And even when you select on these, it's going to show you just the open interest here. So you can at a glance see the date to expiry and what the open interest is there if you're picking between multiple dates. And then you can get to the strike for the contract and it will give you the overview of the Greeks here too. So let's just say we're going to January and we're going to go with 420 for a call. And then you can model that out, how it's going to perform over time and as the price behaves, or you can just put in, if you have a measured move target and you think Apple's going to get to 800, we can put that in there and it will show you how that option will behave over time. Now, this is just for buying a simple call, but you can add to your strategy to build multi-leg positions. So right now I just have my buy here. I'm going to save this position and we'll just call it the default name. So this now goes down to our positions list. Let's make that smaller, which we have right here. So below this position, we have our saved positions, and you can load these, you can save these, you can bring in your existing positions. So these are saved simulated positions. There's a way you can save it as a regular position or something that's an active position. And during market hours, it'll actually track your profit and loss on those if it is a real position that you want to follow. And then if you want to just learn more about different kinds of presets and you want to do a bull call spread, you can click on this and it will automatically populate the two legs of that position. And then you can edit these to the specific date. Essentially, it helps if you already have the proper expiry date here. And then you can go to really the pro mode if you want to get really advanced with some of these and learn about how these different positions function, save them to compare them over time. Again, there's a lot more detail we could get into here, but I'll save that for the recorded video because we have a lot to talk about in the AI Trade Desk. And let me just see, Position Designer, the previous version showed P&L in the saved. Yep, that I'm just realizing.
So that one was partly moved to the portfolio. However, we can always bring it back and have it in both places.
I think it would be helpful. Yeah, for anybody who doesn't have the portfolio view here, I think it would be helpful just to, see it there too.
Makes
so
sense.
we'll bring that back in.
We can keep it in both places.
Yep. And if anybody else has notes like that, these are the kinds of things as we've been migrating everything and bringing these two tools together because the AI Trade Desk does a lot. So there's some overlap in functionality, but if like this, we want to bring it back, we absolutely can. All right, so let's see. I think that is really all I wanted to say. Let's get into the star of the show, the AI Trade Desk. And Melissa, I'll let you take over again.
We'll put it back. Useful.
Texas, yes, it did track cumulative profits across all the positions. We just need to bring that back in to the actual tool itself, but we can get that in quickly.
Right. So the AI trading desk is, I think, if we were to put it into kind of a short sentence, is your AI Tom to some degree, right? With legal conventions aside. But the main idea with this one is obviously, and you guys see this, there are places to ask questions, there are places to have specifics, right? But this will allow you to have your own, let's say, personal place where the process from Tom has been ingrained into the system. Now, you, depending on the tier of access, you will get access to more or less indicators. You get access to all the indicators on the second tier, which I think is the plus tier. And that includes some, let's say, AI trading desk specific indicators And the only reason why this one has specific indicators is because we do not have the same restrictions as we do with TradingView, right? So you can see here, we have a call wall and the put wall. And these are the same walls that you could see with Tom on the previous TA terminal, right? We can bring them into the chart. We can take them into account. We can do things like go to the open interest and go to the options flow and research those before making a decision or before continuing the research. So it has more features than TradingView from the analysis perspective and from the computation perspective. And once again, the whole idea is to bring your AI version of Tom to some degree, right, into this tool to consult at your convenience on the specific thing that you care for. So by default, you are on the super chart selection. You will see that you have your own indicators, deviation bands, adaptive levels, BRPT. So obviously you get that anywhere. You can take off the signal markers, put them on. You have stack attack, AMR, right? So all of those will be included the option walls only for equities for these reasons. You get them all. We are not doing all the timeframes for this one, right? Mainly because it would be incredibly costly, but we are working on all the timeframes that Tom will usually reference, which are the weekly, 1 day, 4 hour, and 1 hour, right? You can draw. It's not, I would say, this is not the strength of the tool, but you can, if you want, have your own drawings in here. I would say, again, probably not the main goal of the tool, but you can have those. You can have drawings in it if that's something that will help you kind of understand a little bit better the tool. So you can, again, do it if you want to. Now, obviously, the main feature is the AI component. So here we have Apple. You can go as deep or as short as you want. There are features already in place to kind of make sure that whatever you ask will be used within reason. So if you don't, you can. Again, you absolutely can. And hopefully some people kind of will tell you how it works. But, there are mechanisms in place for you to basically just say, hey, how is it looking, right? And even if you are making a very simple prompt, it will try to get out of that one all the intent possible and make sure that as much information as possible goes into the analysis. Now, because it's trying to do quite deep research, including searching the internet for information, news, put and call walls, options flow, all the indicators, there are different areas. This is, let's say, the light chat style, right? If you want to have a read, talk about it, go over why is it saying this, why is it saying that, right? This is the place to do it. This is the interactive version of the tool. So I'm realizing this might be, I'll make it big just for now, right? So short read, 4 hour light briefing, right? Price action in Apple is hovering around 305, 306, just below R1, so resistance 1, right? So it's basically going to give you these are the key levels today. This is resistance at 338. Next support, strong supports are here, 266. The 4 hour BRPP is in this place. So it's going to basically give you the read because I was just saying, hey, how is it looking? Then it will give you also takeaways. It's a neutral stance. Currently, it's not seeing a way to either trim, exit, or enter, right? And then it will give you some caveats. And basically, what will it change its mind, right? Like a daily close above this would be with the confirmed reversion signal will make it, hey, this is strengthening. A break closer below or under 300 with high volume will kind of be the opposite. So you can, at this point, continue to interact. You can take it over somewhere else. You can simply start a new session at this point if you also want to and look at something else. Let me go back to 100% and wipe the session. Or again, I'll leave it there just because. So this is what you would get. Credit limits and some features are gated. All the indicators are on the plus tier. The starting tier is basically you get deviation bands, which is the main one that we use anyway for most of the kind of support, resistance analysis, and decisions. And whatever you get access to, AI gets access to. I think maybe I'll take a look if there are questions on this one specifically before moving on, so we don't have maybe whiplash. Let's see.
There's a question on what's considered a deep read versus the asset charts. So I think you're going to get into the full analysis
deep
next.
reads, exactly. So I'll get into deep reads in a second. So I'll gracefully skip that one. One important thing, and I see there is a free version. You don't have to pay to try. You can try the free version today if you just log in with your any email. To be fair, it doesn't even have to be the Patreon email. So with an email, just log in, try it out, see if you like it. You'll get 3 full reads one time, no refresh. And the chat version, I think you get 5 or 10. I think 5 chat versions every day. I will say most of the strength obviously lies within the indicators, just not because the indicators are the best ever, but because Tom's logic is tied to the indicators, so the AI can more strongly pull information from them. So that's, let's say, part of the gating itself and part of the different tiers. One of the reasons is those indicators carry a lot of data. Processing a lot of data is also significantly more costly. So not all reads cost the same also on our side. All right. So I will say, like, let's see, for example, from Max, we can never give you trading advice just for obvious legal reasons. You can ask about positioning, right? So you can basically go now and say, like, how is it looking to enter some Jan 27 calls now, right? So you can ask about positioning. You can definitely ask about recommendations. You can try to get information out of it. It's, at the end of the day, it's an AI. Trust it how you would trust, let's say, maybe a super strong AI or a supercharged AI. But the AI, for obvious legal reasons, can never really give you proper financial advice. It can give you a consistent process analysis, right? It's going to follow the same process every time, and it's going to give you the outcome that process goes through, right? So if the process dictates a buy, it will maybe say, hey, bullish, right? I'm bullish right now. If the process is, let's say, more bearish, you can get consistent readings on those charts and help you have maybe like a more consistent way of doing it. Mm-hmm. So again, it will give you those rates, and you will see the reference, again, the indicators consistently, like deviation bands and MRR, right? Like the reason that is good, but again, it doesn't really give you, at this point, it's basically saying the best case trigger is a clean daily close about 307 of 308, right? It's basically saying, I need more confirmation, which in this case you will see is, hey, it needs to get above these resistance levels. This is not a good place to act, right? So it will give you risk control structure ideas, like if you decide to do it, maybe take this one, right? So you don't go too far out of the money, right? It's things that would change mind and bottom line. At this point, neutral to cautious, right? No strong entry signal yet for January 27 calls, right? If you want to pursue it, just have a tight defined risk on the vertical, for example, a vertical spread, which is something that you can go to the position designer and take a look at, right? You can go take a look at the vertical spread and continue.
Yeah. And there's just one thing I want to add. I think the strength to using a tool like this to supplement your own trading is the consistency. So there are times where human discretion is going to win, but I would argue that they are fewer than just reading the charts consistently for saying these are the technical levels, this is what we're seeing in the flows. That's going to win, let's just say 80% of the time. But if I'm looking back at the last couple of years, earlier this year, if you were charting oil here, maybe it would have said that oil is looking weak and it needs to break these swings, but we know that tensions are rising, globally, so we might have some intuition about oil to act early. Or when the COVID crash happened, certain charts like Zoom at the time were not looking particularly strong before COVID, but we might have an intuition that this sector is going to run. So we will outperform sometimes, but if you're just looking for consistency to bounce off of your own feeling, that's what this would be used for.
One thing that I will add, because I saw, like, you do not need TradingView for this.
Yes, no TradingView.
It's built, let's say, it uses the SDK part of it. So it's its own thing, right? It's built on top of, and that's why I get all the indicators here. And that one has an important advantage, which is I can now do things that I could not do before. So it's quite likely, and to no fault, let's say, of yours, it's very likely that there will end up being AI trading desk specific indicators that I cannot make for TradingView. Because there are limitations in TradingView that I don't have here. At this point, I can do whatever I want. I can even have an LLM right here, right? I can even have an LLM-based indicator. I can have reinforcement learning indicators. I can have a lot more freedom within here, which likely means it's very likely this will have at some point unique or proprietary indicators that they will never reach TradingView.
Yeah, that's a great point. And just so everybody gets why. So TradingView hosts all the indicators we publish on their own servers. So for security reasons, indicators have limitations, and PineScript, can't pull in external data. I mean, Malaise could sharpen up all the limitations, but here in Python, you can do a lot more than you can do within TradingView. There was one question from Sasha about only getting one indicator, and I think that's just because it's the trial version, right? Yeah. So once you're logged in with a higher tier account, then you get all the indicators. We have to stagger some of the access just because of the compute costs associated as you move up in those levels. And then Stoic was asking about levels. Can you use it to help you decide layering into a position? E.g. levels and percentage,
Yeah, of course. And in fact, we'll see that one in some different ones. Think of the chat version. This is the least powerful version. So we started with this one because it obviously has the chart, which visually is way nicer. But this is the least powerful level, to be fair. So it basically, in the 4 hours, right, it's always going to give you, to some degree, the levels that you are seeing, but it can help you identify different sizes of the intended tranche, level 2 of layer 2. So you can definitely have levels, including like hedge alternatives, like the system knows how to hedge, right? Or where to trim. So yes, of course, you can definitely get levels conditions in here.
Yeah, but let's talk about the more powerful ones, because I think that's where it really starts to shine.
So now, as we mentioned, the chat version is the mini version, right? The full analysis or the deep reads, full reads, right? This is where the process goes to, maybe that's maximum potential, because if maximum potential would maybe cost way too much, right? But I would say this is where we do stretch the system to its most. This is basically where you can obviously, we added this, and thank you, Darwinning, for suggesting this, but you will have, let's say, some suggested prompts. And this is where, once again, you can ask things like very basic, just Tesla, right? Tesla 4 hour swing flat. All that you write will overwrite over here. So I say, if I write here Tesla 1 day, it will overwrite your 4 hour. If I do Tesla long term, it will overwrite swing. So the ticker or question is the source of truth. And then these are like the default, right? Like I don't have a position, I'm long, you can have different options, or the size that you are trying to allocate. So you are getting, let's say, also some layering positions in there. Now, you will see in here, and we will see as it builds, this one is going to go through the weekly, daily, 4 hour, if you ask for it, also the 1 hour, and it's going to look at the price action from a lot of different perspectives, right? It's going to look at it from, and again, these images, they are there kind of for show. They are not for you. This is not for you to make TA, just to be clear. These are images that are designed for the vision mechanism of the AI, right? We saw them because we might as well. It looks nice, I guess, to some degree. But these are not for you to then go on charts. This is what the AI is saying. So currently, the read on Tesla is neutral with confidence 58%. They are capped. Max is 100. So neutral is 58. Maybe bullish is 22, and the remainder is more bearish, right? So indeed, Tesla is bouncing from the sell, right? It's on this weekly and daily regime is basically neutral, not supportive enough for a fresh long. The conviction is moderate to rebound of the 300 or 330 is real, but right, we are again back on the call wall. And these are nice things that we can do here that we cannot do in TradingView. We do not see those walls in TradingView, right? And then again, we have a 4-hour RSI divergence with positive gamma pinning on the price. So this one, as I mentioned, it's going to look at all the information. It's going to search the internet for data, for news. It's going to go significantly deeper than the other one. And it's going to also do, once again, multi-time frame analysis, as you are seeing already here, mentioning weekly, daily, and the 4-hour as well. So it's going to go longer, right? It's going to give you targets. Short-term target is 365. It's kind of coins. The medium term, 370, and longer term, 430. Right? So it's going to give you these targets. It's going to give you risk rewards if you're trying to play, right? Anything, right? Risk 5, 9%, decent, but not clean enough to chase, right? It gives you the thesis, right? So this is where the RSI is. This is where put, call, that pool area is included in here. As you can see, we are trying to get all the tools, right? We are trying to fit the AI with it. These are the scenarios, base case, right? It chops between 340 and 350 and 350 under the call. The bullish repair is it reclaims it and then pushes to the 365, 373 area, which you will notice is what Tom has been mentioning in videos. And the bearish case is basically we go to 309 back again. Options play, no trade. There is nothing in here, right? Maybe you can play a long call spread or a long call, but then it's no trade. That's the verdict, let's say. And then it gives you the process, right? Macro is now back on, risk on, after consumer discretionary is no longer leading strong enough, which this is from yesterday, or I think yesterday indeed, right? Mm-hmm. So risk on back again. Structure, looking at weekly and daily, range bound on the 4-hour recovered from a hard plus, but it's sitting under supply, right? It gives you the levels for you to take into account, right? And these are not directly the adaptive levels. These are levels identified by the system, right? Signals, the things that are, let's say, on, it's positive gamma pinning. The multi-time frame RSI is still bearish, and mean reversion is idle and not firing. Position flat, right? So basically, hey, I don't really have a lot to do here. You can also copy this report if you want to set it somewhere else. If you want to do anything else with it, you can copy, take it out. I'll go through the images again. I do find them funny because they are very noisy for us, but this is basically pinned into the AI's system. So it's going to go basically the requested time frame, full hour, full overlays, weekly, major levels, daily, swing context, right? And you can see, for example, the gun swing is actually nicely put in there with the 3-bar and 3-bar included in there. And then fine tuning, which this is where, let's say, more of the fine-grained analysis happens. You will see that you can chat about the read, and you will bring Tesla and your context in case you want to continue the conversation, right? Because you might want to know, like, hey, like what happens with the bearish flip, right? I want to talk about it. I want to know more. So these would be the full read versions. These are, let's say, one and done. If you want to talk more about them, you take them to the chart. But this is to be basically about having a consistent and biased process that mimics the swing trading or longer term positioning from Tom. It knows how the indicators work. It has all the information. It knows how they are supposed to be read, what they mean. It has, it also identifies patterns like inverse head and shoulders. All of that is built into the system. So it can look at the chart, find those, and give you, let's say, proper consistency within them, right? Take the emotions out. Let's say trust someone else's process. In this case, you keep coincides with your, fantastic. But this would be, again, this is all that we got from just Tesla. You can then just go like, hey, I'm looking to get back into a position. I started the position at 350. I'm trying to get back in, right? So this is going to give you all of that within a single place. You can make the prompt more specific. You can keep it at your own, right? Like levels, what are the levels? What is the thesis? Is the thesis an NVIDIA intact, right? So this is the big one, I would say, if you're trying to get something, let's say, a full picture on a stock.
And as you were saying, to chat about that read, do users have to bring that over to the chat, or can they just pick up the conversation?
Oh, no. Like at the very end, basically, you can go to super chats, and this is what it's going back to the previous one because I started a different one. But you have a button. And by the way, actually, I did this. You can. It takes a long time. It can take minutes. Depending on the asset, it can actually go for a long time. So feel free to go somewhere else. Like you can have the full read here, and then maybe you go to your portfolio to take a look at it, right? So now I'm in this one, and then I can just go back and feel like, oh, all right, it is still working on it, right? It's basically at this point synthesizing the verdict. These are the early reads. So you can move throughout. And then as soon as this one finishes, we'll click and bring it to the chat to continue talking about it.
Great.
So I want to go over it. Yeah, chat about it, right? And then it brings you back to it. So you see.
There was one earlier question just before we get too far down the line. Someone was asking if I'm not taking very many trades, just one a week, is the starter version enough to get the information I need?
So if you're only taking one trade a week, the starter version, and this is depending on the value, I'll say, and I'll reiterate, you don't really need this. This is extra, right? This is for you to have more tools at your disposal. One of the main and the strongest difference between the different tiers is the indicator access. And you will see that this is constantly mentioned. If you're only taking one trade a week and the indicators are not a strong part of what you are doing, I think so, right? If you're not really trying to get deeper down onto deviation bands, AMR, stack attack levels, then yes, one trade a week, you can stay there, and that's perfectly fine. And then if the indicators are, let's say, part of your core premise, then maybe you upgrade. However, again, you can also, let's say that you are a quant member and you have the indicators in TradingView. You can always ask the question here, like, hey, what about NVIDIA? And then go to TradingView and put your indicators and kind of do the confirmation yourself. So my suggestion is try the smaller one, and then if it's enough for you, then that's good enough, right? And then if you think you can take more from it or that you need the indicators, then try to upgrade, right? I would not start, especially if you have doubts, on the highest one, unless you are maybe super convinced and money is not a problem. But one trade a week to me sounds like a very reasonable to start on the cheapest or on the free one, and then see if you need more. The main issue with free is that you don't get the upgrades on the full reads because they are the most expensive. So free only has 3 total and they don't refresh like on the paid versions. So maybe long story. Yes.
Yeah, sorry, just to ask. So the determining factor between the different tiers is not the number of deep research you do, but it's the number of indicators. Is that
that's part of it. So I'll go over it.
And there's another question that can integrate into this, just confirming the power of the AI used by the different levels. So that
it's all the same AI. They don't have like the AI behind the scenes is the same one. The thing that changes is the process to modify for the indicators. But you don't get more powerful LLMs on different tiers. They all get the same one. It's just about the actual process behind the scenes. So, Matt, to answer your questions, obviously you do get more. Like, for example, the starter, 3 deep reads a day, 3 alert triggers. This is, for example, if you have a portfolio and you have something move and trigger an indicator, it will send you an email, basically, and we'll go over that one, right? And then you also have chats and tracking of assets, right? Now, on the plus, you get the same, more deep reads a day, more alerts, triggers a day, more assets to watch, more tracked assets. And then you obviously get all the indicators, right? And to be clear, these are not TradingView indicators. These are indicators on the AI trading desk. Buying the Plus or Pro will not get you anything on TradingView. It's fully consolidated on the desk. On the Plus,
that's a good clarification.
Yeah, and I've changed the wording, I think, already. Exactly. On the AI trading desk, full suite built into the AI trading desk. So I've already gotten a couple of questions, and I'm not trying to lie to you. Like, it's just to be clear, this is on the AI trading desk. So the full suite, it's on Plus. And again, for various reasons. First of all, this one does, just by the fact that you need to take more steps and ingest more data, it does actually increase cost significantly. I think maybe I want you to stay on that starter. I'm not sure if the margin makes sense on this one, but fair enough, right? And then you also get some more fine-grained control on how you set your own alerts. You can set them for some on daily, some on the 4 hours, some on the maybe all on daily. So you get more fine-grained control over the alerts themselves. And then the deepest or the highest tier, basically 30 reads a day, 25 alerts, triggers, and rereads on those. You have multi-stage analysis, and this is where it's not a more powerful AI, it's a more powerful process. So again, they are all using the same models. It's the process that changes. This is basic process. This is stronger process with indicators, and this is the full process with the full indicators, right? So that's what is increasing the let's say, from one tier to another, mostly. So it's not just you get more, which you do, but also what the AI is trying to accomplish behind the scenes.
Yeah. And I think we did the math right, but if you are a power user and you use all 30 of those every day, it's going to be close. We might actually lose money on subscriptions for power users.
I think so the math comes out that if you are not a quant and so if you are paying full price, right? You are not a quant, you are not a trader, you are not an investor, and you are just paying the full price. If max usage, depending on compute and some minor things, basically is break even for us. It is what it is. But I do like this tool. I've been using it, obviously behind the scenes before we released it. I've been actually using it to trade myself, just to kind of inform myself, gather information, get a perspective on assets. For example, I've been trying to get into Enphase for a long time. This has kept me out for a long time. I'm very happy with it. But that's an area that I find it helpful. So basically, just have a second opinion on demand on a process that at least I trust. You don't have to. I do. I trust the process itself, and it gives me an unbiased opinion on it. I do see some people mentioned Robinhood. You can import your portfolio. We are not integrating with Robinhood systems, and this is I won't go super in depth, but we are being risk averse with the tool, right? We are only implementing read-only. We are doing double-binded encryption, basically, right? We don't keep the data. We don't. We keep the data. We can't see the data. So if for any reason there were to be breach, the data is encrypted as long as you basically keep your key encrypted. So we can never have access to your data, your portfolios, your assets, unless you specifically click on granting. By default, it will be encrypted with a key that only you know, and that is a key that encrypts the data on an encrypted database. So there is a lot of layers, let's say, on there. And for Robinhood, unfortunately, we don't have the portfolio import because we would have to go through, let's say, a third party. And that means that we are not selling, but we are sending your data to this third party to get your portfolio in here, which I think it's too big of a risk. We don't know these people. We don't have business relations with them. So we are avoiding that one. You can use pictures. You can import from CSVs. And then if you are trading on interactive brokers or some of the other ones, then you do get read-only access via queries. But we are not integrating deeper with any exchanges.
So what would be your recommended? I'm just playing the user here. If I want to import my portfolio and I'm on Robinhood, do I export a CSV? Do I take screenshots and bring things in? What do you think's best?
I think CSV. So you can just go to import portfolio, right? And you see some connections are locked, right? Unlock brokers. So I use IBKR. So we do have flex queries, but you see this is locked. I have to unlock, put my passphrase, and this, let's see if I remember the one instead. Now, this passphrase will unlock the database so I can then run my import, right? I'm not going to run it because I don't necessarily want you all to see my portfolio. Some of them do support it. For the basic way would be to import it via CSV, basically, right? So just from file and then choose a file, and I should not I have no clue what's going to open on my computer. But yeah, images, screenshots, right? So just mentioned here, Robinhood, right? So it helps identify, or on the file, select Fidelity, Charles Schwab, Robinhood, something like that. That would be the recommended way if you are not in a read-only connected broker.
Just going one step back, James had asked what LLMs were integrating. I think it's multiple.
We are not going to disclaim that, mostly because that also opens like trickery questions. We do have guardrails specifics, and we are using Azure. So within Azure Foundry, we get access to all LLMs except Gemini. So that will narrow things down. But from there is Cohere, there is OpenAI, there is Grok, there is Claude, there is Kimi models, there is anything that you can think of is within Azure. That's, let's say, as far as I'm willing to disclose, just for security and protection services, just even on asking the questions to the LLM. And we do have some guardrails in place just in case. But yeah, I'll say, as I mentioned, the margins on this are not huge, especially for power users. So hopefully that gives enough information.
Yeah.
And I see, yes, because I do see people responding on the chat, but obviously for the recording, it won't appear. The limits are daily. So it's, let's say that you get 10 full reads. It's 10 full reads every day, right? So it's trying to enable you on the day. I think if they were monthly, I don't think you get enough out of it. So they are daily, so you can go every day and ask questions. They reset currently on market open. We will change it so they reset slightly before market open, so you can do preparation work. But they are daily. All of them are daily.
Yeah, and that'll be implemented in a couple of days. The idea is just move it a couple hours before markets open. So if you are doing research before the trading day starts, you have access to your fresh quota.
Exactly. And yes, you can do a deep read, click a button, and it will open it in Supercharts, so you can continue talking about the super read Stoic.
And then, oh yeah, you just answered Stoic's question.
Yep.
Great. Now, in terms of the scan journal, anything else you want to go over there, just to give folks the basic overview?
This will be, this will be, I think, quicker, because now that, let's say, we have established the more or less what it's trying to do, then these are, let's say, different combinations of it. So this, for example, helped me when I was trying to take positioning in Chinese stocks. So you can, for example, have here, you can include, this is a comparison, the comparator. And the comparator is trying to get you to, I know how to type. So you may be looking at a sector and you may not know exactly which is the best stock to enter on this sector. Maybe aerospace, space in general, maybe it's crypto, maybe it's quantum, right? I used it also, in fact, for quantum, funnily enough, right? And let's do JD, because I think everyone's a little sad with JD. Should I select the right one? Let me click too fast. Yeah. And then bull, because I have not entered bull and I'm sad about it, right? So then you can basically say, like, let's say I want to spend, and this is on you, like this will be then forgotten, right? I'm trying to spend 10K, which is the default, the 4-hour time frame for a swing trade. I'm quite aggressive on my trade, and I'm trying to generate income or just speculate, and I am options approved. Basically, hey, I am trying to enter the or get exposure, right? Get exposure to the Chinese sector, which that's any of it now. And this is the comparator will use 4 reads because I put 4 stocks, right? Or 4 equities, let's say. Now it's going to run 1 full read per each one, and then it's going to run another full read on top to kind of combine them. So you get, let's say, like 1 extra full read if you do it this way. So now this can take minutes because it's going to go through all of them, right? And in the end, it will basically tell you, most of the time, because most of the time you're not supposed to buy things, most of the time it will tell you no, right? Like no trade here, because again, most of the days there is no trade anywhere, right? But it has helped me identify both BABA and I think Bull was good. I didn't pull the trigger. I'm sad about that one, but I did enter BABA because of these ones. And then it basically will tell you the play. Like it can tell you, for example, enter both, like enter Bull and BABA, enter Billy and BABA, right? And it can basically tell you, this is my preference. I would maybe allocate more to BABA than to Billy, right? So this is, let's say, an aggregation of full reads to kind of cover more ground on this. So again, think about it like Sol, Bitcoin, Ethereum. You can obviously do uncorrelated assets. You can definitely do Bitcoin, NVIDIA, and HIMS. I think that's up to you. Maybe you have that. Just mentioned that you're trying to just find an opportunity for speculation or something like that. But I've been using it mostly. Yeah, I've been using it mostly for that.
So if you were doing this and you put in the prompt, say you just had the Chinese names and you said, I'm looking for China exposure. These are the names I'm looking at, but let me know if there are any other tickers I should be considering. Would it bring those in, or would you have to first research all the names and put in the tickers individually?
I already have work started on that one. The main issue for the research component is the volume. I need to find an efficient way of doing that processing. One thing that you can do is you can actually do it through your portfolio. So the portfolio has alerts that if you go to settings and you activate the email, they will email you when something happens. Like you can see the rotation radar, mean reversion, multi-time frame RSI, stack attack, confluence cloud. Like, sorry, I need to change this one now that I say it, right? So these will help you get an email when something happens, right? It will run a read for you. This is not priced as a full read. This is not priced as a chart. It's priced as the real reads, right, that you saw in the store. So this can be a nice way to get an alert where something happens through your portfolio directly. And then you can obviously add things as a holding situation, like own, right? I own Apple in the main account, and then I have this entry on this position. You can have multiple portfolios that you can manage, right? One with Fidelity, this one is taxable, this one is just the IRA, right? With different coins, or coins, different currencies for each one. This one can be a very nice way to have multiple things on your watch list and then get an email notifying you when something happens on the indicators. Same situation with TradingView, you can get notified, but we thought this might be helpful because the notification will have, right, the notification will have a read attached, like, hey, it broke support, we are looking at this. It's now looking like a good entry. It will have an analysis attached to the notification. It will not only tell you that, hey, mean reversion bot. It will give you analysis with it. Final thing, just quickly, the journal with the things that happen, right? And then obviously you can open it to go back to it. You can share the link if you want to share it on Discord. Hey, like I got this read about, which is this one, with JD, actually from the Comparator, right? And then you share it to Discord in case you want to share it. You can obviously copy it, download it in a card, which I'm not going to do it because I don't know what it will open in terms of my download and personal files. But yeah, TA terminal, decision designer, we've gone over. This is for broker connections. Some of them are accepted. These are the ones that we have access to. We don't get access to the ones that we cannot do direct connection, right? Which for brokerage is interactive brokers and trading one, two. No, you can. I see there is a question about the portfolio. Once again, you can import from images. You can upload up to 10 images to import your portfolio. You can upload from files, CSVs, Excels, XMLs, and you specify from where. And you can have a connection to some portfolios and manually, of course. Yeah.
Great.
So this is it.
Should we check on the comparator to see if it's all done?
Actually, that's a good idea. It's going on Bull.
Okay. Great. So
actually, this might be the perfect timing. Now it's going to run the final one, and there you go. So currently, basically, shares, right? BABA, slightly bullish. Go with shares instead of options. I said I had 10K to spend. It's telling me go with just 24%. This is the entry for Chinese, right? This is what it thinks. Right? It gives you like the comparison between them. Like Chinese exposure. Baba is the best relative setup to the group. It's the least, it's less broken than Billy, which I think I agree with that one. Cleaner than JD at the current spot and sitting on a usable support cell rather than chasing strength. The risks are still neutral overall, so this is a start position, not full conviction bet. The goal is to get a controlled swing entry with defined risk. This is basically final. What kills it, right? What's the good one? You get your reads in here, just kind of to check they were indeed full reads on each one, right? And then kind of the play, right? So the play is to enter Baba with this, slightly bullish. This is the entry zone. This is maybe add only if, right? So if you enter here, you do not add until you retain these levels, hard invalidations, and the ranking on it with Baba, JP, Billy, and Boom, and the risk rate. So this is the full, let's say, desk.
Great. Awesome. Well, I don't know if now is a good time, but Darwinning and NJAY have been giving us brutal feedback all week and kicking the tires on this. So I thought it would be helpful to just have them chime in a little bit just to share how they've actually been putting it to work. And I guess the real world applications of how this integrates with your trading. Because I know Darwinning in particular, he's always doing research, asking AI chatbots. And so he's shifted over to using this the last week. So I guess, Dave, do you mind if we start with you? Oh, you're muted, sir. I'm just going to pin you too.
Sorry about that.
And NJ, I'll get you pinned as well.
Yeah. So, I mean,
sorry, your background.
I know. Yeah. We got all the guys in there, don't we?
Yeah. Yeah. It's great. I forgot that trip already to the White House.
Yeah. You guys covered a lot of it. I have focused mostly on the deep read side of things. I mean, I'm getting into, only a week in the thing. It's awesome. So that's my first blush at the whole thing. They had highlighted the fact that you can just type in a ticker and get useful information out of it. But what I found, you can really dig in. The point is, I guess, try and make your questions that you put into that thoughtful. So just like you would do a prompt in an LLM, it gives you different answers based on that. I went from typing in just a ticker and getting basically a one-page feed out to getting 3 pages of feed out. And you can even, I had it do things like I'm interested in taking a position in gold. I've got a position in this already, but what about this? And I'm using it as a hedge in the market. It literally went through the entire process of talking about which ticker was a better hedge, which was a better one to use with calls, which one was a better, and then it went through all the entries, exits, all that information. So, it's an extremely complex tool, beating it up quite a bit here for the past week or so. Trying to think if there's anything else worth mentioning in there. I've actually taken the notes that come out of the deep read. I've copied the chart and I'm actually embedding it into my TradingView and then hiding it so that I don't have to toggle back and forth between the systems. And it's a little bit of a twist on how you do it because TradingView doesn't like large files, but you guys can ask me later and I can tell you how to do that. But it's nice to be able to just turn it on and look at it. And then you have all of your levels right there. I'm going in and actually recreating, where it's specifically saying resistance and support, typically following what he's got on his adaptive levels anyways. But
yeah. And Matt's asking, this is actually perfect for you. He's like, Matt's asking why one can't just type the same question into Claude or ChatGPT. And Millais could talk about the why, but maybe you can talk about what you're seeing as the difference.
Well, I've already taken, you can copy the report and I've gone into, because I haven't used as much as I probably should have yet, the follow-up chats in there and how to take that and expand upon, my initial question if I didn't think of it fully in the first place, and if it can take that and pick it up and go from there, because it should just be a running conversation. Once you've established a conversation on a deep read, you want to pick up and go from there. And so, obviously putting in what, here's the trade that I did do and have it track from there and go forward. But I think it's pretty incredible so far. And I use LLMs a lot right now. And I've gone across the board as far as trying to put in thoughtful questions and get information out of it. And you guys all probably know the kinds of answers you get out of there. I've included in the deep reads, I've said, take into consideration the recent earnings report, or earnings are coming up right now, or I heard this on the news, bring all that in. And it actually addresses all of that. So I would just say, Tom and I had talked about even having some sort of, like section where people come up with good prompts and maybe keeping track of those things so that you have a starting place and don't have to write everything from scratch. But I've tried to break it, and so far, I mean, sometimes it takes a while to twist on it, but it's been incredible so far.
Yeah, and not all the feedback was roses. I mean, we've been making a lot of tweaks all week, and I suspect we will still keep making tweaks on it. But I would say that, to answer Matt's question, an LLM can give you a general answer. The difference here is it's bringing all these things together, and it's bringing the training of all the hours of my analysis on the tools. It's reading the indicators, and then it's bringing in all the training on fundamental research and different things as well. So it's really the tuning that's the difference from a standard LLM.
It's your brain in there. I mean, LLMs have no concept, as far as I'm concerned, of trading levels. It gives general answers. I think they've been dumbed down on purpose because they can't give financial advice. So you have to trick it into giving you any sort of answer at all. This system, I'm glad you guys don't tune it down, but it gives specific investment advice, not financial advice, but it does tell you exactly what it would do if it was in your position.
Great. Well, thank you. Nick, anything you want to add to the mix? We integrated pounds and euros, I think, because of you.
Good evening.
Good
Okay. Can you
evening.
hear me okay?
Yeah, hear you just fine.
Yeah, great. Okay. So, yeah, let me sort of try and bring it alive with some sort of real life examples. So I added my whole portfolio in there and started, just bringing that alive visually, rather than having it in a spreadsheet. So that was great. But one thing I guess, really tried to get better at in the last couple of years is patience and really timing those entries. And this week, this tool, the AI Trade Desk, has just blown me away in terms of how it's challenged my thinking, my chart analysis. So I was going to deploy a fair bit of cash earlier today, and I did a comparative analysis across Enphase, Intel, SYM, ICHR, and EOSE. And Tom, we'd spoken about a few of them, so I threw it into the model, and you know what? It came back with a standard side recommendation. And when I looked at all the detail behind the where I thought it was a good time to enter, what the model really does, it explains, why we're not quite there on certain assets and where do we need to be for that confidence and for that timing to be to be more proven, I guess, and to give therefore the trade a better chance of success. So that alone for me is just worth so much money. And I think you would save a lot of money from that detailed analysis. So I've used the comparator. I love it. I've done a number of deep dives, as Darwinning has, on the full analysis, and you could really just say what you're thinking. So, for example, I can say, "Hey, Intel, it looks like there's a inverse head and shoulders forming. I think my entry price should be here, with a stop loss here," and it'll tell you whether or not there is or there isn't an inverse head and shoulders, and it'll go then some. So it's something really that you can start to. Well, I've already started to just have as an assistant on my side, really, I guess, is the best way to explain it. So yeah, very impressive, very powerful. And I think someone said in the chat that this is going to, I think, for all of you who get on board, I think it's going to help us all improve our TA skills.
Cool. Yeah. And I think I've been thinking about it the same way. It's a little bit of a sounding board. And I haven't gotten those same reads on those assets, but it is interesting that you're saying that, because when I look at those charts, a lot of them look like they could head higher. The only thing that's kept me cautious is seasonality and some of, the warning signs in the background still with the yen and stuff. It's like, okay, could we still see a little bit of a drawdown in August or September? But it's interesting that it's saying that on the assets too, just based on the charts and the price action.
And you know, I ran that one specifically at a moderate risk level, so I'm actually going to run it again at a higher risk level just to see whether it changes the answer or not. So again, you can play around with those different things and adjust the tool for your style, for your risk tolerance. So yeah, look, I haven't had as much time as Darwinning in here, but it's incredible.
Well,
really.
Thanks. Glad you guys like it. But yeah, like I said, this is the least performative it'll ever be, or not performative, but performant that it'll ever be. As LLMs get better, as we continue to refine the code over the months and years ahead, we'll be adding new features and continuing to refine this. And I really would encourage all of you that are testing this to give us your honest feedback. Don't sugarcoat it. I would rather, if something sucks and isn't working for you, let us know directly, because that's the way we're going to make it better.
We have a channel for that. So maybe my closing words is, if you try it and there is something that you would like to see or that you don't like, send it to the channel that is for feature requests. I will take it into account, right? I won't reply to it because I don't want to say like, I like yours, I don't like yours. But please do send us your most meanest comment. I will try to do my best to improve on it, right? Because again, I'm sure there will be things to improve. I am horrible at user experience. I'm more in the math aspect of things. So please send things away, right? I won't get offended. I just want the tool to work. I'm obsessed with making the tool work. So
you've been awesome with the feedback, man, because I've been crushing you. So
yeah,
that's the only way we get it to actually to a place. Right? I know my weakness is UX. I am horrible at it. I know the way I approach visual aspects, websites, the way I use tools is 180 degrees what most people use them. So I know like this is not my strength. So please tell me how much these buttons should not be there. Tell me how much this feature is missing. Right? I will not notice. I have this issue. Please let me know. Please tell me how much the chat needs to be this other way. Do tell me.
And what's been amazing, Miles, as in Darwinning would test to this as well. Every night, whatever we've asked for, you found a way to change it. So when we run it again in the morning, you've made the user experience so much better.
Yeah, thank you. Yeah, I appreciate that willingness. Darwinning had a funny comment. The software company that he used to run, that some developers would be like, tell him, no, this isn't possible. And then he would find the one that said, oh yeah, here's how we can approach it.
Yeah, so. no. Miles is, he was the guy, I sold complex software, and it was, users always ask you for everything, and your stuff does 95% of it, and there's that 5% it doesn't, and it's either get the deal or don't get the deal, and everybody tells you, no, it can't do it, no, it can't do it, and he's the guy that I would go and find. I'm like, well, Miles says I can do it, and I just make sure he gets all the goodies he can possibly get and keep them in the box. Yep, he's awesome.
Yeah. Okay, there's one question from DS on, do we need the IA tools and or any particular combination of TA and IA tools? Just very straight question, please. So without getting too much into the weeds, because there is some similarity with the InvestAnswers tools. And the reason we've made all of these, and I'll just speak specifically to the indicators, was because I thought there were certain things that could be sharpened up or refined a little bit. We, a couple of months ago, presented all of this to the InvestAnswers group, and they didn't want to integrate things. So we have stepped off and done our own thing, as we're doing here. And they, I think have similar strategies, but different approaches underneath. So you'll see with deviation bands, with mean reversion, we're trying to do different things, less signal, more accurate signal. So you can, and all of what we've covered today, just in terms of the AI trade desk and all of this, it doesn't relate to the TradingView indicator. So you can use whatever you're most comfortable with, really. So anyway, great. Milius, anything else to cover off on there?
No, just to reiterate, you don't need any of this. These are extras. If you want to go, let's say if you're having trouble, if you think you can improve, if you think these are things for you to help, like they are going to help you. Like if you believe this is going to be of help, try them out, right? You can maybe try for a month. You don't like it, you go back. Don't feel forced. This is not necessarily something that is, we are not going to put a gun to your head, and we will still answer your questions no matter if you use them or not. So
you're being very humble, Miles. You're being very humble, Miles.
I'm trying to. The thing is, it has to be that way, right? Because this is people's money in two ways. First of all, like spending, and the other one is kind of using it, right? And no system is perfect. I cannot build a 100% accurate system. And one bad trade can cause a lot of damage, right? So I think it always has to come from a place of caution with this type of assets. And that's why the indicators have been built also with that in mind. They are trying to be human actionable. They are not trying to get you to do multi-million dollars in a week. It's about, could you act on this? Is this something that you can take the information and act on it, right? Mm-hmm. And we always send the message, like, don't trust the signal just because it's on your chart. Make sure that you verify it, or if you're going to go blind, at least go blind knowing that you are going blind, let's say, right? But these are always helper tools. They are not magic. They don't know the future, and they will. It's not that they can, they will make mistakes at some point.
Yeah. And
quick question. Oh, sorry.
Mm-hmm. No, go ahead.
I was just you're deep in the AI business. And obviously you've dreamt of making something like this, like you said, breaking even on the thing at best, it sounds like. So, but I'm just curious, what do you envision doing next with a system like this? Is there kind of a next level that this thing could go to?
Yes, I do have a lot of ideas, and I'm happy to hear also everyone's ideas. But the next immediate step is going to be, I want the AI on the chart directly drawing for you. That's something that I have already some experimentations. The drawing look awful. I've already tested it a little bit. The drawing of the AI is horrible, so I need to improve that one. Where possible, I do want it to be more connected to the systems, but that is mostly dangerous from a legal perspective, because I don't really want to go to jail. So I'm trying to avoid that with connecting it to some systems.
What do you mean? What systems?
It would be extremely easy to have the AI Apologist or the AI trading desk connect to Jupyter, Radium, Hyperliquid. That could be done in a night. The problem is that then it's placing trades for users, right? And that's dangerous from a legal perspective. That's not necessarily an area that we want to tread on. So most of the features we need to always gauge from the perspective of what even are we allowed to do, right? Because not always is about complexity. That's why corporations have legal departments.
Yeah.
So again, we'll thread it. I'm being specifically vague because I'm always careful of saying, in a month you'll have this, in 6 months you'll have this. It will be able to cook eggs for you and make coffee in the morning, right, in a week. I'll deliver. I'll try to not promise too much unless I'm fully confident it's coming on that moment. I'll let you know, but I don't want to paint a picture that might not materialize preemptively.
Yeah. And for my part, to answer that question right now, for me, it's about refining. I think in terms of the dream tools that I've wanted to have and the functionality, we've got the foundation there. There's room now just to refine everything. And then what Milei said about eventually integrating the indicators, there are a lot of limitations to what you can do with indicators within TradingView. So if you can bring that charting element together with Python-based indicators somewhere else, that would give you a lot sharper signal. So one day. Yeah.
Question. Right. Sorry, Tom.
Yeah.
Question about the other indicators. then this is great. About the other indicators, are you guys going to make a video or?
Yes, it's on my to do this weekend. I'll finally start. I know we've been saying that for a long time, but the complexity with getting the site up and all of this going sucked both our attention for quite some time. So all the indicators are going to have their own video. There are detailed user guides already. Let me just share my screen. So if you go on the website to the community tab here, and then you click on, I don't think the mean reversion one is up yet, but say if we go to stack attack.
You have mean reversion and stack attack. Both
mean reversion
there,
and stack attack.
And the other ones have placeholders.
Yeah.
So we have the print PDF version, and then you have everything written in here in terms of the user guide. And where's the PDF, Milias? Wow, you really added the detailed version.
On your laptop.
Sorry?
Oh, yeah. Yeah, if you go to the top, it will download for you.
Oh, this one here, the print? No.
Yeah. It should. Maybe it's blocked.
Yeah, you can save the PDF there. Yep.
Exactly.
So
it's for you to keep, let's say.
Yeah. So we're adding that still for the deviation bands. Malaise is just finishing something up. But if you want to get the detailed overview, this goes into dialing in settings for different time frames and everything else associated with the tools.
Got it. Cool. And Malaise, for the options builder, one suggestion for you is to blend in Kelly's criterion so people could determine what the size of, based on their risk capital, what's the size of investment they could put in.
You can do that in the desk. The options designer, like the position designer, it's meant to be agnostic, let's say, to capital. It's more about the strategy itself, like how it looks with the numbers, not necessarily how it relates to entering or exiting. For enters, like how to play it, let's say, that's the AI trading desk. And that one does have risk assessment, risk preference appetite, how much you tolerate volatility, how long-term, like if you are going for January or October or 2028, that is already built into the AI trading desk.
Yeah, I mean, the Kelly's criterion is actually a mathematical formula.
I misunderstood that one. Definitely, I'll look into it.
Actually, I have it built, and I think, Tom, I send you the link to the one that I had built. You guys are more than welcome to use it. Yeah.
Yeah, that I think that's in the developer chat, or I'm sorry, the beta tester chat there. Yeah, so that's another one to look at. One question that just came up from Texas, he sent me a note over on Discord, was he was confused on which packages to get for the indicators that he doesn't have. I don't have the right view on my chart for my user type, but if you go to the store, if you're a quant member, you could just get the Pro Advanced bundle, and it's going to know that as a quant, you already have all these outside of adaptive levels and money flow, and it'll discount this to $27. Or the full bundle, it'll discount it to that same $27. So as long as you're logged in, it knows what you have. It applies the 30% discount, and you're good to go. So on the store, it's just the indicator collections, and then here is where the AI trade desk bundles are. So and these are really the ones based on the 3, the 10, the 30, as Millie said, and then integrating all of the indicator reads into these upper tiers. Cool. All right. Let's see. I think we covered it. No more questions in the chat. Anything else you guys want to mention? Dave? Nick? All right.
I mean, the only thing that has ever come up, I mean, it's come up, I know that you're making the videos and all that, but I've actually, when I converted over from the IA indicators over to yours, and there wasn't a lot of training available yet, and I was trying to do things quick, I actually took screenshots of the indicator menus and my TradingView and fed it into LLM, and it actually did a pretty awesome job. It was almost, I swear it had a back end view of the TA indicators through, I have no idea, but it was very intuitive, told me exactly what I should click, what I shouldn't click, and what tweaked what. So.
Okay, great. Well, I'm glad that that works. Yeah, and I would say, Millions, do we want to say anything about candle open, candle close, or just trying to make the
Uh,
indicators?
to me, it all is about making sure it's actionable and it's
Yeah.
usable and honest. I That's to me the criterion for us basically. Like that's what we are trying to do. That's what we are trying to build, and then we are trying to build it in a manner that works also for us. Like I'm
Because we're
using
using it
it
every
daily.
day.
Right, exactly. So I don't think we need to go deeper
Yeah.
into any of those things. Just know that our motivation from behind the scenes is, yes, obviously, we do want to make money. We are trading, right? We are investing. It's directly correlated to it. But at the end of the day, from the motivation perspective, is trying to make it actionable and not lie to the user so they can, if they trust and make a mistake, it's a mistake, let's say, directly from the indicator and not because it was deceiving to some degree or just actionable. Again, actionable honest, that's our goal.
Yeah. Yeah. As you can tell, we're great salespeople saying you don't need to buy any of
Yeah,
these
no.
tools. You don't need to use them. But the one last thing I want to say, just that we covered on Monday, is that you need to look at the charts and learn how the signals function as well. So on the deviation bands, the buy and sell signals on the daily, for instance, they often happen if you're studying an asset before the actual turn. So you also just using the tools, don't act on them right away. Wait for confirmation. So if you get that buy signal or that sell signal, wait for that swing break or that lower high or that higher low. So the price chart is giving you some confirmation on top of the signal. The indicators are looking at all the numbers they can read. And often the numbers shift, or I guess hit that inflection point to fire the signal before the sentiment shifts and price action reverses. So when a stock is really frothy and running up, give it some time, but use them as a signal to say, okay, I should pay attention. I should start getting ready to scale out and bring that, or scale in and bring that together with my full plan. All right, wonderful. Well, I hope everybody has a great weekend. Yeah, if you have more questions, suggestions, all of that, you can reply on Discord. I'll post this video later too for anybody that wants to catch up on it. And thank you all for making time on a Friday afternoon.
Thank you,
All right.
guys.
Bye, everybody.